No one could ever ask for a better pinch hitter on any team than Adam Button. Hello, Adam. Welcome back, my trading warrior brother.
Hello.
Buddy. Yeah, got you. Got your screen. Adam, missed you. How about that? It's really, I appreciate you being back here, Adam. And I know that even though it's April 8th, it's still early in April. And when we get together, you have some seasonals that you pay attention to every month. So where do you want to begin? What's on your radar here for the month of April?
Yeah, okay, well, that's a good one. Nice to be back here. It'd be nice if we got some seasonal weather up here.
So
but
cold
anyway,
out there? So
still
cold.
Still, it's been a long winter here. It feels like it'll never end. I mean, April, seasonally, it's one of those months that really deliver. I mean, you see, at least traditionally, these strong patterns in seasonals in April, whereas some months, there's some weakness or there's some ambiguity, whereas in April, you have these very strong trends. And one of them, I just heard Stelio's talking about it, an odd thing that seems to be shaping up is dollar weakness. April is a terribly weak month for the U.S. dollar against the euro and sterling and the commodity currencies, really. So, if you look at sterling, I think it's about 13 of the last 15 years it's gained in April. I mean, and for people who haven't heard me talk about seasonals before, that the obvious caveat is it's just one part of the equation. I mean, what happens with Brexit is going to be the driver of sterling, but that is the seasonal backdrop there.
But its value, Adam, is that it gives you something to look for that gives you a bias that you wait for some price confirmation to see if the seasonals begin to kick into gear. Am I correct in reading you that way with how you utilize that?
That's exactly how I use it. How I encourage people to use it is to think, if this lines up with some technical support, if you see maybe something in the fundamental background, or maybe there's nothing in the fundamental background at all, and it just will drift in that direction quite often. So yeah, the euro, it's a very good month for I don't have the exact, I can pull up some of the charts there if you want to see.
So possibly Draghi is not going to sound as dovish as perhaps the market has expectations for this week. And, we've had sentiment readings in the dollar in the 70s for a long time. And actually last week, Adam, we followed DSI. I'm sure you're familiar with it. Euro had like a 16 reading of bullishness. And, that's almost as bearish as the market could be. You could get the single digits, but it's very unusual. So you have most people friendly the dollar, bearish euro, cable, etc.
And when the CFTC numbers came out on Friday late, and the euro position, I think, was short net 100,000, which I think is worse since 2016 or 17. So the market is really bared up here on the euro, and that's the seasonal. That's what I can sort of look at a heat chart there, and you can see kind of the 10-year average shows it's the best month for the euro. Now, but you can see within that, there's not that much consistency in the euro. Kind of, what is that, 5 of the last 6 years, though, it's been higher, and 8 of the last, 7 of the last, 6 of the last 8.
Do you post this stuff on Forex Live, Adam? Do you post this stuff like this? That's a great heat map of your seasonals. You share that with your community, correct?
Yeah, we have that kind of start of every month. I'll pick through them and try to match up with a few of the other things that have been going on. I mean, one of the all-time great ones, it never really gets its due because people don't like to look at it as much as oil. I mean, April is the best month seasonally for oil. And if you go back kind of February, March, April, you can just see that top line of the chart I'm showing. There's this consistent pattern in Q1 into April of strength in oil. And it's been the best trade of the year, right? It has been 45%.
Besides S&P, besides stock index.
Right.
Maybe they've outperformed oil, but yeah.
Yeah, it's been remarkable, and it's that weakness at the end of the year in oil, and that once again, came through on spectacularly for crude. So that's a good one. And as you can imagine, you see oil higher. It's higher Canadian dollar as well this month, higher Australian dollar. Dollar yen is a little bit more mixed, so that's not the spot I might be looking for dollar strength. Natural gas is another one that runs for a couple months starting now. I don't know if too many of your traders are looking at that. It's extremely volatile trade in natural gas, but it's pretty beaten down. It's kind of near support.
They call it a widow. They call it a widow maker. That means
it's crazy.
Yeah, that means that if you trade it, you might, your wife might be left alone.
I mean, I have like in the seasonal. Sorry, I don't know if it's gonna be easy to speak, but I believe so. You look at natural gas. There's the chart, and I don't have the up-to-date one, but that's just a seasonal story. You see from you went from $2-3 up to $5 in October, November last year. I mean, in a heartbeat. So you're talking, 80% moves in pretty short order there, and then right back down from 5 to 2.5. But you're kind of near this 250 level, which has been
and you're putting in a higher low here, higher low as well.
Yeah,
right?
It kind of ticked off that. The one thing is, it's really there's natural gas is a world of its own. It's all in these delivery points, right? So certain parts of the United States and parts of the world, natural gas it's almost at zero. It even traded negative last week because you get these massive gluts and you can't get it through the pipeline. So they say natural gas is a colorless, odorless, tasteless, and worthless natural resource. So it is a tricky one to trade. I wouldn't advise getting too into the fundamentals unless you've got a lot of time. But technically, it does seem to have that area of support there.
What are the biases for the precious metals during April? You have a lot of people still looking for lower numbers in gold, maybe around 1250, but this 1280 is held like a rock, and we're having a pretty good update today, Adam. Any clues there in April?
Hey, you look at April, I mean, the trade in gold for me, and I talked about it, I think almost the last time we were on was maybe December, January. The start of the year is the time to buy gold, and it came through spectacularly again this year. I think it ran up 8 or 10% from December. It was a nice place to camp out during the volatility, and it's kind of creeping a little earlier. So, I mean, my trade every year is to buy gold in December, sell it at the end of February. And I think I've talked about it 4 or 5 years in a row now, and it's come up again and again. And now you're in this more choppy time. So it's been interesting in that it's volatile. And if we have the chart here, I'll pull it up somehow. And it's just not that compelling for me right now. I mean, we're a little bit worried about the downside, right? Because you tested off this and it looks a little bit like a head and shoulders top. But seasonally, I don't see it. I mean, if you are looking for dollar weakness, it can be there. I mean, you do have a little bit higher lows coming up here. It's a very interesting technical chart. Go
ahead, buddy. I'm sorry.
No, I want to buy gold when it breaks 1400, and that might be a ways off. So 1380, 1400.
Yeah, it just seems like most people are looking for lower gold numbers because they missed this recent rally and they want to get long right around 1250, 1240. I'm not even talking about the super bears, but also there are not many people talking about the long side. I think the biggest surprise in gold would be it goes from here and cleans out all the stops over 1360. Maybe then it turns bad because everyone's going to call that such a major breakout. If we take that 1360 out, it measures 1500. So I think that's unexpected from here is for gold to rally towards 1400, and that may be a surprise.
I have been surprised. I mean, we maintain a chat room, and there has been so much talk about gold in that lately, and it kind of retail's back interested in gold. We have central banks, right? If you heard the Fed was going to cut, I mean, the market's pricing in a cut, but if we get that signal, I mean, the sky is the limit. I don't see. If you can get up above 1400, 1500, is to scan out a little bit. I don't see why you get up above 1400 or 1380. I don't see why you can't go back to 1900.
Okay. All right.
That's up to me. So for me, I'm not in a big rush to buy it at 1,200 or 1,260 or 1,280, I think wait for 1,400 to go and then get on board and hang on for dear life. But that's kind of the way I'm looking at it.
All right, speaking about holding on for dear life, with crypto traders really have popularized that, and recently they've had a little reprieve. I liked the way Bitcoin held a few months ago, putting in a higher low, and we've had a breakout. Any view, and is Forex Live now giving some more coverage to cryptos now that the EKG is in a flat line and we're starting to get some action?
Well, we never stopped covering it. We never stopped. So hold on, let me see if I'll use our charts and pull it up if I can get it going here. I think, I'm just a little bit, what makes me uneasy is just the speed of the move, right?
Okay.
And it certainly makes it for an interesting move. I am more inclined to fade it, but
okay.
That's kind of where I'm.
18,000 to 3,000, rally back to 6, where it really had a major breakdown, would not be unusual and is not the hallmark of a bull market yet. It's just could be a bear market rally, like you're sensing, correct?
Isn't that the old rule of thumb with something where it goes that fast? It's not the best signal to see something. You in a good bull market, you want to see it ticking higher every day, not something where you have it's on inarguably a bear market over the last year, and then you get this snapback 25% rally in 2 days. That's actually kind of a bearish signal, the way I see it. But Bitcoin's a little bit of a different market. Can you generate this retail enthusiasm again, or this enthusiasm from the layman, or have a lot of these people been burned out and won't come back? That's not such an easy question to answer, because what brought so many people into Bitcoin to begin with was the price action, right? So a lot of it sure might have been the technology, but
everyone loves a parabolic move, and usually near the end of it, right?
People find it easy to believe in something that's going up every day. It's going to change the world. So,
that's an interesting pearl. Okay, that's an interesting pearl. That, and although we did have probably about a 6-month basing period in Bitcoin before this recent rally, and to you it could be most likely some type of short covering panic, and I'm trying to understand how that could happen, since I believe they've taken Bitcoin futures off the board, and when they put it on the board, that was the hallmark of the top where people could short. Could people still get short Bitcoin, and could that have been one of the major catalysts for the April Fool's explosion, Adam? Do you know that?
The one thing for me, it doesn't. You can get short CFDs, you can get short futures. Futures, I just didn't think the volume is there to do it at the CME. So to unwind it for the, so that would be hedged. But I don't see how the CFD volume would be hedged by the brokers enough to cause that kind of squeeze. So it to me doesn't, I've read all the explanations, and you go out there looking for them, and it does look like a squeeze in the sense that you see the volume coming in these massive bids, but from the structure of the market, it's not the same kind of two-way market. Like, there's not the borrowing. It obviously could be, but it's just not structured in that same way where you could see a squeeze in a stock, for instance, that's got 20% of the float outstanding. Bitcoin isn't like that.
Great segue. Great segue to stocks, Adam. We haven't talked for a while, and we had that the worst December in equities since 1931, and I felt we could have a bear market rally. I was looking at FIB 61.8, 78.6 of that decline, and I have to say that the magnitude of this recovery was much more than I was looking for and my account was looking for. So What do you have for April in stocks? I know a lot of people think there could be some type of high in April. And did you expect this type of recovery off, just one low, no retest, kind of a V bottom, and outstanding, surprising to most recovery in the S&Ps, almost within a couple percent of all-time highs?
You never kind of. I mean, I was there, I was positioned for it, I was buying at the bottom, but I think that's kind of, I wish I had the old clip. I don't know what I was saying last time I was on. I'm going to pull it back up maybe and we'll talk about it. But it's a reminder to people that, I was watching TV every day. I mean, I was trading on Christmas Eve and working at Forex Live and writing about it. And like the amount of bearishness was just out of control. Every guy you saw come on TV was saying, "Oh, we're in cash or we're defensive now."
Yeah.
And as a retail trader, someone who's watching it, it's tough to get away from it. It's tough to shake, especially when the market's falling 5% a day. But that is kind of the experience of it all. Is that, well, okay, these guys they're over the top here now. Everybody's bearish. They can't be bearish, and the data for me was never that bad. So I obviously I was miffed and puzzled at the power and the strength and we're all worried about the Fed and that was kind of the story in December. And the Bank of Canada was just as bad, and some others were the biggest, even the ECB. So I mean, I was constructive and if not outright levered bullish. I'm surprised though at how kind of steady it came back in early January. It was day after day, and then really through February now, even to now, I think we're up 6 days in a row through Friday.
And this is your weekly. We haven't had one weekly down. We haven't had one down week since the week after the low. Almost looks like it did going into 2018. You have all those green weeks into the high. So okay. Great call.
I guess people out there looking for what's happening now. I think this is it. I mean, April's a great month seasonally. You can see it's been a spectacular start already. Earnings season is coming up. You see every day analysts cutting forecasts for earnings. Economic data has been weak to start the year, and I think it's going to be a poor earnings season, and this is a top. Like maybe we get back to the highs. We even break the highs, blow it off. But I think to me now is the time where you want to be a little more defensive. I don't think, the way the Fed's set up, I don't think you're going back down to the bottoms, but I don't think there's much more in the upside here. So there's got to be some other way to make money until the Fed decides it's going to start cutting.
How about a pullback, Adam, 50% back towards, 2640, 2630? Does that seem viable to you?
I think it does. I think, you get that, start to get some selling into the summer. That's the way it completely sets up for me. I'm still long here, and I think it's been impressive every day. You kind of get a little bit of taste of negativity. You've got some of these IPOs coming up, but I was really disappointed in the Lyft IPO. I think retail is going to feel pretty burned by that. And now you've got all these other ones that might start to sag. And I think it's been a nice run, and this is it for the year. I think you're probably still belong here.
Okay, so then, you brought up the Fed. We can go to yields, and we peaked at 3.25, all the way down to 235 in the 10-year. Recently, having a bounce that may be corrective, or if you're right, and there is some economic weakness. And I do want to bring up like copper. You already brought up oil, but any view on bonds? We had the DSI a few weeks ago up around above 80% or so on bonds before this recent pullback. Do you have a view on treasuries and yields going forward? And is there anything in April seasonally wise that we should be paying attention to on rates?
Right, sure. Yeah, there's the yields on. So you got a little bit of a bias towards lower yields, so it's higher price. But if you look through the numbers, I mean, it's all over the place.
Yeah.
April, so I wouldn't expect a single from that April, May bias in rates. for me, I think it's tough to get much lower until you see a lot of bad economic data. I mean, non-farm payrolls was all right this month. I mean, there's been nothing where you can say it's been terrible. I mean, even if you have a 4-point miss on ISM non-manufacturing, it's still well above 50. Chinese data has been ticking higher. I think it's Chinese trade on Friday. So that's going to be probably the most important data point of the week. Although you could probably argue it's bad, it's just a trade war skew. The one that I'm really watching to capture that overall sentiment is Aussie yen, and it's the world's most boring chart right now. Here it is since the start of the year. You had the flash crash in January, and it's just chopped between 77.50 and just below 80. So it's about a 3% range. We're up near the top of it right now, and for me, whichever way that one goes is going to be the big tell. And when it breaks, it's going to take everything with it. I mean, it's the classic old kind of carry trade, global sensitive.
Yeah. So this is your
story.
This is your risk on, risk off tell that you really pay attention to, right?
You've had this risk on trade. It hasn't been able to go up. I mean, if you look at Australia, it hasn't really done that well. So it's telling you, all right, the only reason stocks are back where they are is because the Fed has pivoted, because rates have come down, and that helps corporate borrowing. It's not saying we're getting better growth ahead globally or in any sense. And so
this has been a jawbone rally then, Adam, without Aussie yen confirming it.
Well, and you're going to see it in the earnings coming up. I mean, you can't really have stocks going up forever if you're not growing earnings. So, and if you're not growing global growth, you can't have the Australian dollar staying up here. I mean, they'll be cutting rates in the second half of the year. And I think this is the big tell. And it's such a boring trade right now because it's tough to make money in the 3% range. But once it goes, I think you're going to get it to go, quite a bit. And up to back down to these flash crash lows or up to 84 in fairly short order. So that's the big barometer that I'm just waiting on. That's what trading is, right, Dale? It's just waiting and being patient, and
you have to be willing to sit there and do nothing for a long time, which most people have a very difficult time doing, including myself. And it has to be so compelling that you're going to feel worse about not taking a trade than being stopped out on a trade. So that to me is compelling. And since you brought up Aussie yen, we had a very nice move on the long side in Aussie Kiwi with what New Zealand Central Bank did. Do you look for a continuation of Aussie holding up better than Kiwi?
That's been this kind of paradigm, right, with these central bank kind of shifts. That's a 1-hour chart, bring up the daily for Aussie Kiwi. And it has been that nice snapback rally, but I think the other shoe to drop is the RBA saying, all right, we are going to cut. So, I don't love it as something to hold up. I mean, industrial metals prices have done a lot better. You mentioned copper. It is. Copper, it's so skewed by supply issues and what's happening in China, though. China signaled it wasn't taking Australian iron ore imports in a few ports. So there's this dispute going on there that may skew Chinese trade or Australian trade data, might skew economic data, and it might trick the RBA into cutting. And it might not be that bad, but I'm not terribly upbeat about the global growth right now. 2%, global GDP growth. Europe is in a terrible spot. China's stimulating, and that's kind of the big bet that they're going to be able to raise everyone with them. But how much do they want to go? I think, there's going to be a huge sell the fact once the trade deal's done.
Okay.
And
I'll tell you what, Adam. Thanks for reminding me how much I missed hearing your commentary over all these months. You were always one of my favorite guests because you really crystallize things. There's not a question I can ask that you don't have some very good reasoning and narratives for. The best way to follow you, Adam, is on Twitter at Forex Live. And if you want to show Forex Live's website, now would be a great time to do it. But I thank you so much for coming in here today, Adam, and giving us and sharing all your great views. You're kind of a rare breed, Adam. You have put together fundamentals and technicals. You've married them in a way that very few can do. And, I'm a fan of Adam Button.
All right, Dale, that's humbling. Yeah, thanks so much for having me on. It's good to be back on again. Well, we don't do this more often. I get just stuck in my head, so it's nice to spit it out once in a while rather than just typing it on a keyboard. So thanks for being a great start to my week. This was fun.
Thank you, Adam, and go to Forex Live. And Adam has a great crew with Greg Michalowski as well. And Adam, thank you so much for giving me some ideas and confirming some that I already had. Anytime a pro like you can back up and give me confirmation on what I'm thinking and what I'm doing in the markets, it adds conviction to what I'm doing. So thanks again, my trading warrior brother, Adam Button, for being with us and edifying F.A.C.E today, buddy.
Thanks a lot, Dale. Hope to hear from you soon.
All right, buddy. Okay, that's a wrap. See everyone for Turnaround Tuesday. Remember, don't just count your pips, count your blessings. And see everyone tomorrow. Good hunting the rest of the day. Remember, be part of our family. And right now, you could go into members chat, see what Blake's doing and the rest of the pros for the rest of the day. Adios, everyone, and see you tomorrow. Thank you for your attention.